Welcome back to the Dividend Diplomats YouTube channel, guys. It's Bert and Lanny, your favorite dividend investors out here, guys. Today, we're not talking about dividend stocks to buy. No. We're not talking about dividend stocks we're watching. We're actually going to talk about 3 dividend stocks where could a dividend cut be on and in the horizon for these 3 companies.
Womp, womp, womp. Before we talk about them, smash that subscribe button. Give this video a thumbs up. Holler at your boys, the Dividend Diplomats. We talk about the good, the bad, and the ugly on this channel. We're all dividends all the time as we pursue financial freedom and retiring early. So let's talk about some stocks, Laney, that may be staring that dividend cut down the road.
Yeah, now we've already had some dividend cuts and dividend reductions. Insert, gosh, I don't know, where do we start? Walgreens Boots Alliance, Leggett and Plot, 3M's dividend reduction. Who else was out there?
Man, MPW, right?
That might have been last year. I'm not sure.
No, I don't know. Well, hasn't been good for them either, but you all get the point here. So dividend news in 2024 hasn't been great. And I think what you're seeing is a lot of the legacy companies, a lot of these great companies that have bloated balance sheets, found ways to increase their dividends over the years, are now dealing with the reality of what a high interest rate environment entails and realizing they may not be able to maintain those high dividend payouts and high interest rate debt going forward.
Yeah, and part of this video is just to put it at least out there. I think Bert, you and I might own all 3 of these companies as well.
Thanks for reminding me.
And really, it's just to bring awareness because maybe you lost track of some of your dividend stocks. And, one of these stocks actually just increased their dividend about 2 months ago.
Yeah.
Which is funny.
Yeah. And that's
probably more on cash flow, but we're going to look at really the dividend payout ratios here.
Yeah.
So that's usually the first solid sign.
Yeah, it's a very good canary in the coal mine here. So we're excited to talk about these 3. We're going to talk about the stock screener metrics here as we go through each one of them. PE ratio, payout ratio, obviously, because that's the core part of this video in our analysis to see if the company can maintain the dividend. History of increasing dividends, because that could offer a little bit of future on how long they'll try to hold on to that dividend. Then we'll talk about that bonus metric, the dividend yield.
Yeah, guys, again, just want to bring awareness. I'm not sure what I'm going to do. I don't know if Bert knows what he's going to do right now with any of these stock positions, but this first stock before we introduced them actually did do a dividend cut 7-8 years ago, maybe longer. And then they actually came back and they've been increasing their dividends now for over 6 years since they resumed it as they climbed back to that previous dividend, guys. If you already know them, let us know in the comments. But we are going to talk about Kinder Morgan, KMI as their ticker symbol. Pretty much have owned this company, I don't know, for almost 10 years. I know, Bert, you've owned it the same amount of time. And they just increased the dividend barely a couple months ago. And I can see why, because that payout ratio is growing. Recently they're trading at $19.81, guys. $1.21 is the projected EPS according to Yahoo. So the PE is 16, a little higher on the oil and gas industry side. But Bert, what happened to this payout ratio?
Well, the payout ratio has been a climb in here. That their dividend of $1.15, their payout ratio is so close to 100%. It's a hair below. It's 95.04%.
Scary.
Yeah, not at 100%, but it's close.
Right. Now, they are known to reward their shareholders. And, given that they already gone through this once, I'm not sure if they would want to set themselves up to do it again in such a short period of time. In this industry, a lot of it's cash flow based, but we're just using our plain metrics here. So again, they've been growing back the dividend for 6 straight years at an average rate of 6%. The yield is still high at about 5.81%. In fact, we've actually seen a lot of appreciation on the stock this year, right, Bert?
Yeah, it's been up 11% this year, up 17.5% over the last 52 weeks. So it's interesting. It's been performing well. It's an interesting case. After that first dividend cut, they've come back and they've been really conservative with their dividend too. What's been nice about KMI, the second iteration, is when times are great, they've been very aggressive with increasing their dividend. You've seen the double-digit dividend increases. But when there's a revenue, earnings, cash flow slowdown, management isn't forcing a dividend increase. They'll take a small increase. They'll take a 2% every once in a while. So they learned from the first time. The question is, doesn't matter whether you learned from the first time you changed your approach, the numbers are the numbers to a certain extent. And there's only so much you can do.
Numbers don't lie, right, guys? But managements do.
Do.
Uh,
Yeah. I like it. So that's the first one here is Kinder Morgan. Again, ticker symbol KMI. They popped on here because of that 95% dividend payout ratio. Lanny, who's number two here? And what's caught your attention with that?
this company was once trading over $200 a share a few years ago, but then hit a lot of turbulence, I believe, I don't know if was it the marijuana cannabis
Yes,
space.
it was. That's what got them into trouble. Um, Very much so. Who are we talking about here?
Well, we're talking about the Ohio-based Scott's Miracle-Gro, ticker symbol SMG. And we were just talking that the stock was once trading 2 months ago back in the upper 70s at 76 as well. So a few years ago, trading in the 200s. And then now they plummeted way down. Now they've kind of been climbing back up a little bit. But again, recently their highs were in the upper 70s, again, back in April. Stock's down 67.53, projected earnings 263 based on Yahoo. 26 price to earnings, so fairly expensive for them.
Mhm.
And they pay an annual dividend of $2.64. So you're at 100% dividend payout ratio right now.
Yeah, 100% payout ratio. And they obviously haven't increased their dividend. And
Got that streak.
yeah, that streak's over. And what's interesting here is even your point, they are down from their high 200, but this year they're kind of flat. They're a little bit up 4.88% in 2024, up 2.9% over the last 52 weeks. So they've just kind of been, ironically, the worst way to say it is stuck in the mud, or they keep doing a lot of yin-yinging. It just results in nothing at the end of the day. They haven't done much from when you expand the scope out.
And they used to do a special dividend, not every year, but often. And obviously we haven't and won't see the likes of that
Mhm.
for some time now. So,
Yeah,
the dividend yield is not supporting some of the risk right now either. So just keep that in mind. I'm still holding, and this could be, one of those. Hey, what's the growth look like? What's the future look like? Is it time to find a price point to exit?
Yeah, and when I look up here and you look on Seek you see what's kind of caused some of the slumping news. They're not getting help on the guidance front. In fact, management actually lowered their guidance estimates. They lowered earnings, so they're managing their expectations for their shareholders here. So while the results may have seen some improvements on the actual results in terms of revenue growth, management's not exactly being optimistic that there's going to be a big second half for Scott's Miracle-Gro.
Are you guys holding the Scott's Miracle-Gro bag? Are you laying down that seed or fertilizer on your dividend portfolio by owning this stock? Let us know your thoughts on SMG, guys. But I said that there were three stocks. We just covered KMI Kinder Morgan. We just covered Scott's Miracle-Gro. Again, these aren't stocks that have announced a dividend cut, but payout ratios are looking at the ceiling. The next company, which is you can call it the Michael Scott snip snap company here. I actually exited one of the entities, but we're talking about Dow Chemical. Ticker symbol is Dow, DOW. And Bert, give us a little bit about some of their stats right
Yeah,
now.
their price is 55.68. Their EPS is 3, so that gives you a PE ratio of 18.56. Payout ratio, their annual dividend's $2.80. Again, earnings were $3, so it's at least below 100%. It's not below 100% by much because their payout ratio is 93.33%.
Which is interesting because some of their counterparts, the payout ratio isn't as tight. Um, Lyondell Basel just, I know not the same industry, but they just increased their dividend by about 7%, I believe. I think Dow DuPont's been starting to increase dividends. But
Yeah,
something about,
Dow.
the earnings, they only earned 73 cents last quarter. Um, so
Yeah, you know what, everyone? If you know a little bit about what's going on with Dow and their earnings and why things are looking flat, please let us know in that comment section. It's not a sector we highly cover or a company we monitor closely. So we'd love if you know something about Dow, you have any insight. We know we love when you guys give us some of your insider insight. Let us know down there in that comment.
Yeah, they had last year's first quarter they were in gap net loss per share.
Boom.
So, yeah, winner, winner, chicken dinner, baby. So,
Yeah.
again, when you're battling an almost 100% payout ratio, 93%, it gives you alarm. And the
Un
reason why it's also on the good discussion here is Burks, what's that growth been like on the dividend?
Not one, not two, not three, but 0%. They haven't increased that dividend at all. So ever since the nastiness of the split off, it's just been a rough dividend growth front for Dow. Caveat is, unlike Scott's Miracle-Gro, at least they reward you. You at least get a 5% yield with Dow, which is right now yielding 5.03%. But without any growth, it is what it is. You lose purchasing power over time without that dividend growth.
Absolutely. Now the stock is up 6%, since last year. Again, kind of flat year to date. It's kind of done not much. It's trailed and lagged the market. Hasn't grown dividends since they've done all their business combinations and spin-offs, split-offs, whatever you want to call them these days. So it's kind of been one of these like, okay, is a dividend cut now going to be the push to kind of go, okay, let's really rethink about this position?
Yeah, that's right. So that's number three, the three companies again. And I'll just cover the payout ratios for them. Kinder Morgan, KMI, payout ratio 95%. Number two, Scott's Miracle-Gro, ticker symbol SMG, payout ratios 100%. Dow, ticker symbol Dow. I love it. DOW, that payout ratio is 93.33%.
Yeah, guys, let us know what you think. Are these three stocks possibly going to cut dividends? Are you concerned? Do you hold or have you sold? Or are you adding to any of these stock positions? Let us know in those comments below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. What else do we need to tell those fools out there?
You're either with us or you're against us, Jack. That was Bert and Lanny from the Dividend Diplomats. Over and out.